So in this lesson, we're going to be looking at Elliot waves. I have a really interesting story with that, and it's pretty much the importance of Elliot waves. And they're important, but they're not that important. Let me explain. So I knew about Elliot waves for a very, very, very long time. I just never looked into them because I thought they weren't that important. And then when I eventually looked into them, that was beginning of 2017. And I had a big aha moment. I kind of had an awakening. I was like, wow, everything I did in the past, Elliot waves fully fits into it. Okay, so let me explain what I'm talking about. And at that point, when 2017 came, I pretty much felt like I mastered trading. I fine-tuned everything there is to fine-tune. And I did. I haven't changed much since 2017, since the beginning of 2017. Even when I fully kind of understood Elliot waves, that hasn't really changed much in my trading. But I learned that when I first looked at Elliot waves, I learned that literally everything I have done prior to that already had Elliot waves within it. So my strategies were already built around Elliot waves. My management was also built around Elliot waves. They looked at it, the way I looked at a chart or the trending market, Elliot waves explained that. And that's the thing, you're going to look at the lesson, you're going to understand what Elliot waves are, but to tell you the truth, you don't really need it. Why? Because it's already incorporated within how I trade. It's incorporated within the strategies themselves. And that's what was the big aha moment to me, the big awakening, because I already fine-tuned my strategies at that point. And when I looked at Elliot waves, I'm like, wow, I'm doing something right. And what are Elliot waves? Elliot waves is pretty much, it's a sequence. It's a sequence of numbers, 1, 2, 3, 4, 5, A, B, C. Okay, and it measures the trend. It's based on psychological behavior, crowd behavior, and Elliot is the person who created Elliot waves. It's named after him. He pretty much figured out that the market moves in cycles. Okay, obviously trends. The trend moves in cycles, and we have waves, we have pullbacks, and we have corrective waves as well. So imagine this. We're trending upwards. We have this bullish trend making higher highs and higher lows. Okay, well, there's 5 waves within that typically. Wave 1 is the breakout, wave 2 is the pullback, wave 3 will be the biggest run ever, wave 4 is the pullback, and wave 5 will be the last run before we have a corrective wave or a trend change, where then it begins with an 1, 2, 3, 4, 5 again. If it's a corrective wave, there'll be an A, B, C pullback, and then we'll continue with another 1, 2, 3, 4, 5. And I'll explain all of that when we look at the chart, but it's pretty much the structure of the trend. So why is the Elliot waves important? Well, it's incorporated into the analysis, into the strategies themselves, like I said, but why is it important? It's important because it gives you information in regards to the trend, okay, and how much potential there is in a trend. So if you know that wave 1 is the breakout wave and wave 2 is the first pullback, and you see that on the chart, you see the wave 1 breakout and you see the wave 2 pullback, then guess what? The biggest run is coming, which is wave 3. Okay? If you already have wave 1, wave 2, wave 3 present on the chart, then you know that there's going to be a wave 4 pullback, and then when there's a wave 4 pullback, that we only have one more shot to catch the move in that trend, which is the last run, and that is the wave 5. Okay, so it's important for that. It's pretty much, we'll see how Elliot waves pretty much blends perfectly with Fibonacci retracement and Fibonacci extension. And you'll see that when we look at the chart. It's pretty much perfect the way it blends together. And again, because Fibonacci is everywhere, Elliot waves are based on crowd psychology, the mass psychology of traders, and you'll see they perfectly blend together. So it's interesting. Know it, understand it, but also know that in the coming up lessons, all of that will be fully blended into the strategies themselves. And the strategies, like I said, are built around Elliot waves. And I didn't even know that until I learned Elliot waves. But it's very powerful when you truly understand it. And like I said, the strategies are built within it. So I'll talk about Elliot waves again when we look at the strategies themselves, and you'll have a better understanding of what I'm talking about. But for now, let's jump on the chart just so I can show you what Elliot waves are. Alright guys, so we're gonna look at the charts here, but first I want to draw you guys the patterns, show you exactly what the patterns look like. So when it comes to Elliott waves, I mentioned that, you don't have to really know them, but it's nice to know them. So my strategies, the way the strategies are built and the way the management is built around them already incorporates Elliott waves. And I mentioned that, I've learned Elliott waves when I already felt like I mastered everything. I was building my last strategy, my strategy number 5 at the advanced continuation breakout. And at that point I started looking into Elliott waves and I'm like, wow, every single one of my strategies and management techniques fully mimics the Elliott wave patterns that I didn't even know, until I looked at them. So that's interesting. To me it was really interesting. It was a very big aha moment. But let me show you. Let me show you how that works. But like I said, know it, but you don't really have to be kind of like religious about it, if you know what I mean. And I'll explain that more as the lessons go on and you'll know fully what I mean. The Elliott wave patterns, what they do is, again, they map out the trending market. So they can give you pretty accurate predictions on where a run in a trend will go. So in the previous lessons we looked at the trending markets, and ranging markets, market conditions, right? Runs, pullbacks, stuff like that. In the coming up lessons we're going to be looking at price action patterns, which also tie into this. So with that, we're going to be looking at the trending market, and we will be looking at Fibonacci retracement and extension, 2 things that we already looked at during this masterclass. So with that said, let's do some drawings. Assume we have a bearish trend, that this is just one big bearish trend and it's coming to an end right here. Let me actually draw this a little bit better. Let's draw a proper trend, just so you know what I'm talking about. Okay, so this would actually look a little bit different. This would be larger, and I'll explain this in a second. Smaller and smaller. Okay, so there's 5 waves. They are called motive waves, okay? And then there's corrective waves, which are A, B, C, okay? So there's 3 corrective waves, A, B, C, and 5 motive waves, which are 1, 2, 3, 4, 5, okay? So let me show you that right now. The first wave of the trend is typically the breakout wave, which will be wave 1, okay? Then we have the pullback wave, which typically is wave 2. Then we have the biggest wave there is, which that is wave 3. That will be the longest waves, the biggest wave. That will be wave 3. Then we have something called wave 4. And then we have a wave 5. Okay? After that, there will be a corrective wave, which is going to be an ABC pattern. A, B, and C. And I would recommend you take, a piece of paper and you kind of map this out yourself and draw it out yourself as well, with wave 1, breakout, so put a 1 up there, wave 2, put a 2 down here, 3, 4, 5, and then corrective wave, A, B, C, and then it continues, wave 1, breakout, wave 2, pullback, wave 3, biggest wave, wave 4, small pullback, and wave 5, another run. Okay, so that's kind of the basis of it, but it goes much deeper. So let me go back and actually draw it properly. Okay, so when we have wave 1, this is how the Fibonacci retracements actually tie into it. So wave 1 will be the breakout wave. Then when you take your Fibonacci retracement, and this is something that you'll be doing in real time, and you'll see that the strategies that I teach, they will fully kind of mimic this principle. So wave 1 is the breakout wave. Then you draw your Fibonacci retracement because you want to know where the pullback is going to go. So typical pullback on a wave 2, so wave 2 is the pullback, that will typically go anywhere between 0.382 and 0.618. From what I find, majority of the time it's somewhere around 0.32. Okay, so let's assume we have a 0.32 rejection. Now we need to predict the target. Okay, how far will this run go? So that's where you use your Fibonacci extension tool that we looked at previously. So you draw from the bottom to the top and then to the pullback. Okay, and now you get wave 3 predictions. So know that wave 3 is typically the largest wave there is, and that will typically go all the way up to 1.618. Not always, it can obviously pause anywhere in between, slow down. It could potentially slow down on 0.618 and then continue farther and slow down on 1 and continue farther. Like it will pause. It's not always going to be like a straight line. Sometimes it will be. Then, okay, once this wave 3 finishes, we need to plan where is the potential pullback for wave 4. Now, pullback for wave 4, let me just extend this, will again go typically to, it will be shorter, it will be a shorter pullback, so it can even pause closer, now it may not even reach 0.382, but, I prefer that it reaches 0.382, so that's personally what I will look for, that it pulls back somewhere to 0.382, okay? And then again, plan your wave 5, which is the last wave, so get your Fibonacci extension, draw from the bottom to the top, and then extend it. And the Fibonacci extension for wave 5 will typically predict a move up to 0.618 before the trend changes or there's a corrective wave. Okay, so how does this look? So we got wave 1, wave 2, wave 3, wave 4, and lastly wave 5. Okay, so that's what it looks like. Okay, and that's the basis, the structure of the market, and you'll notice that the strategies are kind of built around that. Why? Because my first strategy, which is the advanced breakout, will be taken at the end of wave 5. Okay, so assuming this is the same wave 1, wave 2, wave 3, wave 4, wave 5. Okay, my first strategy, the advanced breakout, again, I build the strategies before even knowing this, so that's what I mean. You don't even have to know this, but it's good to know, okay? Because at the end of the day, the strategies are built around it. I just didn't know, until I looked into Elliott waves and I was like, wow, okay, I'm doing something right. So, my first strategy will be advanced breakout, and that will catch wave 1, okay? That is meant to catch wave 1. Then the next strategy, the initial breakout, okay, that's meant to catch wave 3. So we have the initial breakout, okay, pullback, and strategy 3. So the way it would kind of look like, if we want to draw in, just entries just for the sake of it, okay, random entries, okay. So the first target would be, the target would be different. Because it's a breakout wave, you cannot measure the breakout wave, okay. So the target would be typically a little bit different. It would be, again, I'll show you, it would typically be like the 4-hour 50 EMA kind of thing, so I'll show you that later. But that would be strategy 1, advanced breakouts, okay? Then the next strategy is the IBO, the initial breakout, and that would be taken right here on the retest of 0.382, at the end of wave 2. And this will be fully explained later. And with that, again, you can target 0.618, 1.618, because that's the wave, you're catching wave 3. That is the longest wave there is, okay? And then your stop loss would be somewhere around 0.618 or even a little bit farther, so just 0.75. And again, I can explain that later. I will explain that later when we actually look at the strategies, okay? But that's kind of how it's built. Now, depending on how big this wave 1 is, my third strategy, which is the confirmed breakout, the complete breakout, would also be this on wave 2. It really just depends on how far this goes, whether it breaks only the 1-hour 50 or whether it also breaks the 4-hour 50 EMA. And again, you'll know what I mean later. You might have to come back to this once you watch the entire course, and then you'll understand it much better, okay? Then my last strategy, which is the advanced continuation breakout, will typically be catching the wave 5, okay? And the way I would play that is, again, I would wait for this pullback and then entry somewhere around 0.3 to Fibonacci, and with that it will be taken up to the highs. Okay, I wouldn't push it up to 0.618, which I could, and sometimes, you know, I would, but typically that would be taken up to the top of wave 3, and my stop would be, it would be 2 to 1 reward risk ratio, so it would be something like that. Okay, so that's how the strategies are kind of built. They're built to catch all the runs of the trending market. Okay, and I have every single strategy meant to catch a different run of the trending market, which is great, you know. And I built it in that type of way, but not even realizing it. Like I said, I didn't even know Elliott wave patterns until I was building and fine-tuning this last strategy. You know, that's when I started looking to Elliott waves. All right, so now that we know that the strategies are kind of built around that, okay, that to you should pretty much say that you don't have to know Elliott waves because the strategies are already built around it, but it's nice to know to kind of predict where a run could potentially go, where a pullback could go, and how many runs and pullbacks there are in a trending market, such as 5, okay? And it's good to kind of understand that stuff. There's one thing that I didn't tell you, and that depends on wave 2 and 3, okay? Let's just take that out. So wave 2 and 3, which are the pullback waves. Okay, so this is something you can take a note of. If wave 1 is a simple pullback, meaning that it just goes down, you know, it doesn't like stop around, it doesn't move around, it's a simple pullback, then wave 4 pullback will be a complex pullback. And what I mean by that, it will have this A, B, C pattern. Okay, it will be a complex pullback, so A, B, C within it, and then wave 5. Okay, let me explain that again. If wave 1, now let's flip it. If wave 1 is a complex pullback, meaning it has this A, B, C pattern, and then explosion to the upside with wave 3, which is the largest wave, then wave 4 pullback will be a simple pullback. Okay, it will just go down. So that is a complex pullback, this is a simple pullback. Okay, if that doesn't make sense, I can rewatch this a few times. But that is how the market, again, works. That's how the trend works, you know. So we're going to have wave 1 breakout, then a complex pullback, A, B, C. Then wave 2 finishes, and wave 3 is the largest wave, typically going to 1.618 Fibonacci. Okay. Then wave 4, if wave 2 is a complex pullback, then wave 4 will be a simple pullback. And then wave 5 will be typically going to 0.618, 0.618, okay? Which will be a big wave, but not as big as wave 3. So that's the basis of it. You know, after that, you know, we will have something called a corrective wave, a corrective pullback kind of thing. So that would be, again, similar to a complex pullback, but like I said, it would be an ABC pattern. So we can draw in our Fibonacci's again, you know, and that typically goes to, it could go to 0.382 or 0.618. And then another move, which the corrective pullbacks are not as big as the trending moves, but that will typically go to either, it could stall up 0.618, but it will typically go to 1, okay, something like that. And then after that, we will have again a new 5-wave pattern. Okay, so what this would be a corrective pullback, A, B, and C. Okay, let me type in a few more things here. Complex. Okay, so that is a complex pullback. You guys should draw this out or even take a screenshot of it, but I would recommend drawing it out yourself, taking notes. And then if wave 1 is a complex pullback, then wave 4 will be a simple pullback. And then right after that, we will get the corrective wave. And that is this right here. Whoops. There we go. Right, so that is how it works. Okay, and that is the basis of it. So that should give you a pretty good understanding. Know that my strategies are built around this, but you don't fully need to really know it, because I never knew it until, like I said, I was building my strategy number 5, which is the advanced continuation breakout. Okay, and yeah, let's now jump on the charts and actually see how this works in action. Okay, so one thing that I wanted to say is that it's not always going to be this way. You know, it might come a little bit short, it might go a little bit higher, you know, but this is kind of like a general guideline of how the trending market looks like, okay? And the same thing with the corrective wave. It typically happens in the stock market when the overall trend, like the larger trend, is bullish, okay? So that will typically happen in the stock market. But sometimes, you know, when we're looking at FX, where we have bullish trends, we have bearish trends, we have bullish trends and bearish trends, then we can finish a wave 5 sequence and continue another wave 5 sequence to the downside and another wave 5 to the upside, you know, mimicking like a larger range, okay? So it can work in different ways like that, but just understand what it looks like, what could happen, where your targets could be potentially. You know, I will teach many different management techniques that will allow you to exit if it doesn't reach a specific target anyway, you know, but it's nice to know. So knowing that, let's quickly jump on the charts and I'll show you how this kind of works in action. We're going to have a look at pound CAD daily chart. I'm going to jump back to this moment right here. And let's have a look at this trend. It's a small trend, but you'll notice again, it fully mimics everything we talked about. So wave 1, this is kind of the wave 1 because it started the trend, right? So wave 1 started the trend, and then the pullback happened to 0.382. So now this, you probably would catch it once you had this lower high, this rejection, okay, when it comes to a trade. But let's predict the target. So the target would be, for a wave 3, would typically go to 1.618, down to here, okay? That's a typical wave 3 target because it is the largest wave. So it would go to 1.618, and so, like I said, it went a little bit lower, but it already over here started to reject 1.618 and made a small bullish move, you know, and then went a little bit farther and then finally had a pullback, okay? Then, it's getting messy on the charts. Then we have the retracement. We're measuring the wave 4 pullback, okay? And it came a little bit short of 0.382. So you see, it's not always lining up perfectly, but it's very close, right? And then let's measure the trend again. There we go. And wave 5 will typically go to 0.618, okay? So again, messy. Let's go through that again and clean it up a little bit. So we have wave 1, which was the beginning of a trend, then wave 2, which was the pullback, and it goes somewhere to 0.382 and 0.618, okay? Then after that, you take your Fibonacci extension and you predict the target. How far could it go, okay? And at that point, you would do that once you have like a confirmed lower high, like in this case, after that bullish engulfing. Okay, then you're like, okay, how far could it go? 0.618 is 1.618, which is this level right there. That is the longest wave, and that's typically how far it goes. It can pause at 0.618. It can pause at 1, like it did over here, you know, but eventually it should continue to 1.618. Okay, let me delete that to clear it up. Okay, now let's measure the pullback of wave 4. And wave 4 pullback goes right there to 0.382. Didn't reach it fully, but it came very close, right? And then let's measure the wave 5. So I take your Fibonacci extension tool. And wave 5 typically goes to 0.618. So you see this is perfectly mimicking the Elliott waves. And let's see what happened after. And after we had the breakout, which guess what? New wave 1. Okay, this is where advanced breakout strategy would come in, actually, to catch that move to the upside. And then this is wave 5, so let's see, it's starting to retrace here. So Fibonacci retracement, let's put it in there. Okay, how far could it go? 0.32 Fibonacci. We can even toss in an entry here. Okay, predict, let's try to predict. Let's see if it works. Okay, so stop loss, somewhere there. Let's see if we can predict it. So let's measure our Fibonacci extension. So how far could it go? Question is, could it go all the way to 1.618? Let's see. Will it go all the way to 1.618? And like I said, it can stall anywhere. So this went up a little bit higher, so we need to just fine tune it a tiny bit. Okay. There we go. So adjust the waves, the Fibonacci's. And that gives us an even higher target at this point. Okay, so let's see what happens. There we go, we're triggered into the trade. We're starting to explode higher. You see there's a lot of noise in between, but will we get there? Whoop, and we hit. Okay, so I will explain something that just happened here. Right, it eventually hit it. But what we had in between was another kind of wave 5 cycle. Okay, so we have wave 5s within waves. Okay, so wave 1 could have a wave 5 wave cycle within wave 1. Wave 3 could have a 5 wave cycle within wave 3. Okay, so this could be wave 1, wave 2, wave 3, wave 4, wave 5, all within wave 3, larger wave 3. Okay, so you see this is getting complex, and it doesn't have to be this complex, but that's just kind of like an overview of what the Elliott waves are. Okay, so that is kind of how it works in general, and how you would kind of utilize Elliott wave patterns and such to predict the pullbacks, and just mainly to know the structure of the market so that you're prepared for a specific target, so that you're prepared for a potential pullback in the market, so that you know how far could that pullback go, whether it's a wave 2 pullback or a wave 4 pullback, how far could a potential run go, whether it's a wave 3 run or a wave 5 run. Okay, and what happens when a wave 5 finishes? Okay, we could have an ABC corrective wave, and then a bullish trend continues, or we can have a fully brand new trend, like a wave 1, a wave 2, wave 3, or 4, and 5, right? And then we also know what happens when it comes to the pullbacks. We can have a simple pullback, and we have a complex pullback, such as an ABC pullback, right? So that's all the kind of stuff that we looked at. Let's see if I can find more examples, and we'll finish up this lesson because it's getting a little bit long. So let's have a look at the euro, and specifically the euro around this time. Okay, so we have a head and shoulder pattern here. This is called a head and shoulder. Okay, and at this point this gave us a wave 1. So inverted head and shoulder pattern means the bearish trend came to an end. We had a higher low. Okay, and then a wave 1 pullback. This went a little bit farther, as you see, and then let's draw in the extension, and this is going to be totally different. Okay, so what this gave us is it went up to 1.618 and it stalled at 1.618, but it went farther. Again, target worked, so if you had a target there, you made a lot of money, you made a lot lot of profit, okay? But it went farther because the waves can be extended as well. If there's a lot of bullish pressure, it will get extended and will continue and continue and continue, okay? That's why you gotta use multiple tools. You can't just use one tool for your analysis. But the best case scenario is that you built a kind of a trading strategy, management tools, combine it all together into your trading style. Make sure your trading style kind of incorporates all tools, nicely, and that you're not using just something for the sake of using it, okay? So the way I trade incorporates all of it. Everything that I will teach you is incorporated into my trading, right? So this didn't fully work, okay? It went up to 1.618, but overall it went up much higher. So it looks like wave 3 was an extended wave. It continued much farther. So let's draw in our Fibonacci retracement based on that massive wave 3. And this is kind of like an ABC pullback, right? So ABC, you can see that clearly. And it came very close to 0.382. So now let's draw in our larger Fibonacci extension to measure that final wave 5, okay? And there we go. Perfect hit, So even though we have an extended wave 3, everything else is playing out perfectly as it's supposed to. We have the wave 4 ABC pullback, which came very close to 0.382, which is supposed to, of the Fibonacci retracement. And then we have the wave 5, which went up to 0.618 like it's supposed to before the bearish move happened in the market, right? So even though there was an extended wave, know that it's not always going to be perfection. But even here, it's stalled at 1.618, which is important, right? Let's have a look at one more example. I'm going to show you the S&P 500. Because obviously the S&P 500 has an epic bullish market since the recession in 2008, 2009, right? So let's have a look at this monthly chart right here and see, will the Elliott waves apply? So let's have a look. If the wave 1 breakout, this was right after the recession. It fully cleared that 50 EMA and then came back for a pullback to 0.3 to Fibonacci. Okay, so we have the breakout wave and then pullback to 0.3 to Fibonacci. If you were trading my strategies at that point, this would be an entry long with one of the strategies. Okay, then how far will it go? How far will that run go? So will Fibonacci extension line up? Let's have a look. There we go. So Fibonacci extension, it didn't fully go to 1.618, right? But again, wave 3, how far can it go? Wave 3 can typically go to 1.618, but it can stall anywhere between them. So it went a little bit shorter. So this pullback, when it started pullback, did it go to 0.382? Also, not fully, okay? But very similar patterns, okay, and it came very close. And then how about the current run? So this would be wave 5. That is going to even went a little bit farther, not 0.618, but it's going up to 1, okay, which could happen. Wave 5 typically goes to 0.618, but it could go to wave 1 and could go to 1.272 as well in these big, massive bull markets. So overall, the concept is playing out, okay? But just know that it's not always going to be perfection, okay? The pullbacks can go to any one of the Fibonacci retracements and Fibonacci extensions, but just know the structure of the pullbacks, meaning that the wave 1 is the initial breakout wave. Wave 2 is going to be like a simple pullback or a complex pullback. And if it's a simple pullback, then wave 4 will be potentially complex pullback, Wave 3 is going to be the largest wave there is. Who knows? This could still be a wave 3, an extended wave 3. And then we're going to have a complex ABC pullback and the bullish market continues into wave 5. Like that's what could happen. This is a monthly chart, so we could witness another recession. This could just be, a massive wave 3 and then an ABC pullback, maybe during a recession, something like that. And then a massive wave 5, another move, so it could play out that way. But know the opportunities, know what could come And the Elliott waves is kind of like the structure of the market, and it's just pretty much tells you, yeah, what the structure of the trending market is with wave 1 through 5 and the ABC corrective waves. So that is it, guys. Again, I hope you enjoyed it. It's a lot of information here. You probably will have to watch this lesson many times, but I would recommend watching it after going through the strategies and the management techniques and such, you know. So you don't have to really know this, because like I said, the strategies themselves and the management is built with around this without even utilizing it. Okay, we're just using the Fibonacci retracements and such and multi-time frame analysis, and you'll notice it fits perfectly within Elliott wave, so you don't even have to count the waves or anything like that, because it's already within the strategies themselves. You know, you'll know what I mean when you get to the strategies, but after that, you might want to come back to this Elliott wave lesson and listen to it maybe once or a few more times to fully kind of grasp the knowledge that's within here. So for now, guys, hope you enjoyed it. See you guys in the next lesson.